extracts from the statement of financial position of Network are as follows. Balance sheet at 30th September 2002 and 2001. Ordinary shares 500 million to 750 million. So it looks like that some new share capital has been issued. Share premium also has been collected. On 1st October 2001, a bonus issue of new shares for every 10 held was made. So 1st October 2001, actually you gave some bonus issue. Finance from the share premium account. So whenever you make a bonus issue, so in bonus issue, what happens that the share you do not receive any cash. It is just like debit share premium account, credit share capital account. So money is transferred from premium to capital. So cash is not involved in bonus issue. What amount will appear under the cash flow from financing activities in the statement of cash flows for the year ended 30th September 2002? So if you see that, what I can see here, that you've got 2002, and you have 2001, and you have here capital, and you have here premium. So it is 750, and it is 350, it is 500, it is 100, and if you pay attention here, so the difference is here 500. Okay, the difference is here. So you have here 1100 in total, and you have 600 here. So how much is the cash received? Yes, can you speak? Can you tell how much cash you are receiving? Ankit? Hello?
Yes, sir.
Cash received. Can you make a comment here, Pamela?
1.1.
Sorry? Okay, cash received, let me tell you, the difference of these two, 1100 minus 600, cash received would be 1100 minus 600 is equal to 500. So your answer is actually 500 million. But how do you do that? How do you understand it? I told you the answer. Now the thing is that you need to understand. Please pay attention. Whenever you do some bonus issues, your total equity does not change. Usually your total equity, the total of share capital and share premium does not change. I need to explain you in more detail here. Please pay attention. Let me create some example. I want to explain it in such a way you would understand that. Let's suppose that we say that issued, Pamela, you were there in the lesson in the previous, I'm doing the same thing. That was F3, but the question is quite similar. Issued 1 million shares at $1. So it means that cash received is $1 million, right?
Yes.
So you will say debit cash, credit share capital. And it is like, I don't know, 1 million here, 1 million here. Then you said that issued 1 million shares. Face value is 1 million shares for $4. So it means that you are issuing shares at a premium because face value is $1, but you are selling it for $4. So $3 is premium. So you say debit cash, which is 4 million, and you would say credit share capital, which is 1 million, because share capital you only take the face value amount. Any amount which is collected extra, it goes to the share premium account. Now, after these two transactions, you will have here, share capital, and you will have share premium. So let's suppose that after these two transactions, your share capital is how much? Your share capital is
1 million.
1 million from here and 1 million from here. And your share premium is this much. And your total equity is 5 million, right?
Right.
Now you say that issued 1 million bonus shares. And of course, bonus shares, whenever you issue bonus shares at always face value. So you will say credit share capital 1 million. So I will credit share capital 1 million. What do I do debit? This time I'm not getting any cash. Previously you said credit cash because you got cash. You said debit cash because you were receiving cash. Now you are giving bonus shares. So bonus shares are not given for cash. So you always say debit share premium account. So when I say debit share premium, so actually I'm decreasing share premium. Before we said credit share premium. When you say credit share premium means that you are increasing share premium. Now you say debit share premium. So what is happening? Effectively, I'm taking out money from share premium and transferring it to share capital. So it is called capitalizing the premium. I'm capitalizing the premium. I'm giving shareholders some additional shares, and I'm not getting cash from them. On their behalf, I'm taking money from premium. So when you issue these shares, what is happening? Your share capital will increase. So share capital now is 3 million, and share premium will decrease. Share premium will become 2 million. So you add 1 million here, and you subtract 1 million here, and this is your total. Now, so it means that what I just wanted to show you. So let me call it. I say before bonus, and I say after bonus. Okay, clear? So bonus issues, your total equity remains same. There is no difference on total equity. It was 5 million before, and it is 5 million after. There is just a difference in the account, like share capital and share premium will go more or less. Am I clear here, Antin?
Yes, sir.
Okay, good. Now, in this particular question, what they are telling us, they told you that your equity is increasing. The total is increasing from 600 to 1100. So do you think that if it had been all because of bonus, it should not have changed? So they gave some bonus. Because of bonus, there was no change. So any change which is there, that is because of cash. What you receive cash, because they do not say that during the year you only issue bonus shares. Maybe there are some other transactions also. Like if it had been only the bonus issue transaction, then this amount would not have been increased or decreased. One would increase, one would decrease. From here, maybe I transferred from premium to capital, so premium goes down, capital goes up. But you see that both amounts are increasing. And any difference between the equity is the cash amount. Understand the point? In bonus share, how do you do? In bonus share, if you pay attention, you decrease the premium and increase the capital. One is decreasing, one is increasing, and therefore the total remains same. But here, premium is also increasing, which means we offered some right issues, and capital is also increasing. So whatever is the increase, like from here to here, bonus issue, they keep both before and after amounts equal. If it had been only bonus issue, then 2001, 2002, total equity would have been same. So difference in equity is actually the cash financing cash. So answer is 500 million. You already know that it is not the impact of bonus, because if there had been only bonus issue, the total would have been same. Bonus issue, the total cannot change. The change in the total of equity is actually due to a transaction other than bonus. Other than bonus. Bonus issue would not have made this change. If they had only one transaction during the year, let's suppose they only issued bonus shares, let's suppose, then 2001, 2002, the sum total of capital and premium would be the equal amount. One would have gone up, one would have gone down, and they would have remained same if it had been only the bonus issue. So I know that the total is changing because premium is also increasing. In case of bonus, premium never increases, premium decreases. So I'm collecting some premium, which means there are some other transactions. And it is also given here that this was followed by a further issue for cash. Okay?
Yes, sir.
Let's do next one, 275.
So these are examination questions?
Yeah, these are past example, your BBK questions. 275, let's read it, please.
The statement of financial position of Pinto at 31st March shows property, plant, and equipment with a carrying amount of 1860. It had increased to 2880. During the year 31st March, plant carrying amount of 240 was sold, and 90,000 depreciation of 280 was charged, and 100,000 was added to evaluation surplus in respect of property, plant, and equipment. What amount of investment activity in the statement of cash flow of Pinto for the year ended 31st March 2008 as cash paid to acquire property, plant, and equipment?
Okay, so this type of question you should always be doing with a very simple logic in your mind. What you had, so your opening assets. Your opening assets for how much? It was 1860 million, right? And like I told you in previous class, that always keep 3 zeros in your mind, that you have 3 zeros on the top. So you will say it's 1.860 million, 1.86 billion, so 1860. Now from these assets, they did not remain with you. What happened? That some of the assets you sold, right?
Mm-hmm.
So those assets, they went away from you, sold assets, or you call them disposed assets. So how much value of assets did you sell? You should subtract it.
240.
Huh?
240.
So 240 assets, they left with you. They are no more in your business. Then you are also doing depreciation. How much is the depreciation which you are charging? 280. This is the value which has been reduced by depreciation. And then there is some revaluation also. So how much revaluation you did? 100. So it means that your financial statements, keeping these things in mind, your assets should be like this. Based on your numbers, should be 1440. Agreed with me?
Yes, sir.
But actually, how much do you see on the financial statement?
0.
So it means that purchased or added, I can call it. So the difference is what you purchased or what you added. 1440. Very simple question. Agreed?
Yeah.
You started with what you have in your hand, what you had in your hand. Then some of the assets you sold, some of the assets you depreciated. Then you did revaluation. Considering all these things, your assets in the balance sheet should have been 1440, 1.44 million. But actually, you see them at 2.88 million. So where is the difference coming in? The difference is what you added, what you purchased, 144 million.
Sir, suppose the asset is increased to 2700 instead of 2880.
Sorry?
2700. No, this actual
2700.
Yeah.
Then 126 you purchased.
Okay.
And probably your actual balance sheet is 1440. So you didn't purchase anything.
So he's asking what amount should appear under cash from investing activities.
Yes. How much did you purchase? How much did you acquire? This is what you paid. So this is your, cash outflow from investing activities, because you are purchasing assets. Purchasing assets means that you are paying out cash for that.
So how about the loss of 90,000?
Which one?
Loss. The loss.
Loss is like gain or loss is not related here. That will decrease your profit, but it does not impact your cash. In cash flow, we only talk about cash. Let me ask you, for example, you purchased something for $100 and you sold that thing for $90, right? So do you make profit or loss? Of course, you make a loss. How much? $10 you are making a loss. So if I ask you how much is your cash flow, what do you say? 90. Cash flow is 90. You will say, I received $90. Loss is not spoken here, because I'm not asking you how much is your profit. If I ask you profit loss, you will say -10. I'm asking you how much cash did you get. So cash did you get is $90.
I think loss should appear for I think it's operating activities.
Yeah, that goes to operating activities. There is one question which what I'm asking. Okay, let me rephrase Pamela's question. She asked a nice question, but probably she did not ask it as she should ask. So if I know what is going in her brain and what she said. So what she asked me probably is not the appropriate question. Let me rephrase Pamela's question for her. She should ask me that, sir, it says that during the year to 31st March, plant with a carrying amount of 240, the balance sheet amount of 240 was sold at a loss of $90,000, which means that you actually are getting cash 240,000 minus 90,000, right?
Mm-hmm.
This is what you should be saying, that the cash which we are receiving is less. We are actually receiving only 150,000 for that. So what impact we should be doing it here? So why are we subtracting here, how to say, whatever, I don't know, 240. We should be doing 150. No, we should not be doing 150, because I am not preparing it based on cash inflow and outflow. I'm taking it from the net book value. If you pay attention, this 1860, I'm talking about 1860 was the carrying amount. So you start with the carrying amount thing, you were given a carrying amount. So from carrying amount, you subtract the carrying amount. The carrying amount was 240. We are starting with the net book value and we subtract the net book value. And we said that the net book value of the asset is this. And then the net book value at the end is this. And this is the difference.
Okay, understood.
Otherwise, we should also not be talking about depreciation, because depreciation is also non-cash thing. Why? You can ask me, sir, we are doing cash flow question. Why are you incorporating depreciation into it? Depreciation is a non-cash item. Why do we do that? This is also a question. Yes or no? Or did I confuse you people? I think I have successfully confused you guys.
No, sir, we understand that is there just for the net book value.
Yeah, you know,
Would
there
have
are,
worked
there are,
out
there are, there are two
separately
ways.
and then bring
Let
it
me,
inside.
let me explain it. Let me explain it because she had a valid point. She had a valid point. There are two ways of doing it. One way is that I say that, you know, purchased equipment, or I say sold equipment. And I will say that, you know, I purchased equipment for, I don't know, 200,000. I sold equipment for 60,000. And this is my cash flow from investing activities. This is one way of doing it. That I say, what is the value of equipment I purchased and what is the value of equipment I sold? And I said that I paid 200,000 for buying equipment. I received 60,000 from selling the equipment. So my cash outflow is 140,000. So this actually should be minus 200,000. This is 60,000. So 140,000 is cash outflow. This is one way of doing it. But we have not been given data to do a question like this. They did not tell us how much we purchased. So we are forced to take the book values, the closing book values. One way of doing it is this. If they give us the data, they don't give us the data. So we said that our opening balance is how much? So opening balance of asset was this. Then we depreciated them. We said our book value should have been this much. And if the book value is 1440, but actual value is more, the difference is what we increased. And if we increased, that is investing. So we actually concluded the result in the indirect form because we were not given the complete data. I mean, this is what we had to find out. Okay. Clear? Ankit? Ankit?
Okay. Yes, sir. Yes, sir. Sorry, I was on mute.
No problem. Let's do 276, please. Let me delete this one. So it's pretty much same. You will start the same way that opening net book value was 14.4 million, right? And then you sold some assets. So it said that, okay, it says depreciation first. So we said that this is our opening asset value. We made some depreciation of 22.5 million. So we subtract that. This much my asset should be decreased. Then there are some disposals. And it says that an item of plant with a carrying amount of 3 million was sold for 1.8 million. Because you are starting with the carrying value, you are starting with the net book value. So you should be talking about net book value. So out of this 14 million, 3 million of asset is no more with us. It is gone. So I decreased it. A property was revalued upward by 2 million. So some of the property was revalued. So there was a revaluation of 2 million. I added 2 million on the top. And then the last one, okay, until here, it is the same like last question. There is nothing different. Environmental provisions of 4 million relating to property, plant, equipment were capitalized. So you capitalized some provision. So when you capitalizing, you are doing capitalization, your assets are increasing. Capitalized means that converting it into asset. So 4 million, I made additional asset. So according to these adjustments, your closing assets should have been like this much. Should have been 14.9 million. But actually, what you have is 23.4 million. So the difference is addition. It means that this much of asset you added into the system, which is 8.5 million. This is your addition, and this is called your investing outflow. It's very simple, except for this thing you need to understand. Only this one provision. Is it clear?
Creating provision.
Yeah, capitalize the provision. You had a provision and you capitalized it. Like, you remember you capitalized your, when you purchase a tangible asset for renovation, restoration, there's some provision you added into the cost of tangible or intangible asset. Yes or no?
Yes, sir. We use discounted.
Yeah, so the
Find the
value
present
of that
value.
provision you
and
added
then
into the asset.
Yeah.
So we are adding the value to the asset, that is plus.
Okay.
Yes, Myla.
Yes, it's fine, sir.
Okay. 277. Again, looks simple. The carrying amount of property, plant, equipment was 410 million at 31st March and 680 million at 31st March 2002. During the year, property with a carrying amount of 210 million was revalued to 290 million. So there was a revaluation of 80 million you should take. Okay. Depreciation charge was 150 million. There was no disposals. That's very simple, pretty much easy. So where are you starting from? 410, 410, and then
add valuation 80
plus 80 minus 115. So this is what it should be. So I put it here. It should be 375, right? And actual is 680. And additions are this minus this 305. Very simple. Done and dusted. Then do 278. Payments made under leases you have to calculate. So non-current assets, property, plant, equipment, right of use 2.5, 6.5. Non-current liabilities, lease obligations 2, 4.8. Current liability lease obligation is also increasing. During the year, to 31st March, depreciation charge on lease equipment is 1.8 million. What amount will be shown in the cash flows for respect of payments made under leases? Payment made under leases. So how much is your opening balance of lease?
2,000 plus 800.
So if you pay attention, you had how much did you say?
2,000 plus 800 because it doesn't split with
Your
split to current and non-current.
opening lease liability was 2,800. And how much did you make payments? And how much is your, so this is your this year, and lease liability, and you had lease assets here, 2,500, and you had this 2,500 also. And how much you are adding? So adding during the year. So if you pay attention that it has gone up by 4,500, you know, your leased assets are increasing. So it means that you added 4,500. And
Right of use, what is it?
this is lease asset, right of use asset, lease asset.
34, what happened?
And there's nothing in the property plant equipment.
Non-current asset, property, plant, equipment, right of use asset. So this is actually under your, there's nothing in the property, plant, and equipment. It is right of use asset. And this is actually some kind of property.
IFRS 16 now, sir.
Sorry?
This is IFRS 16.
Yeah, this is IFRS 16. You have right of use asset, probably you lease some property. So you put it here, property, plant, equipment, but it is right of use.
Okay.
65 and 25, this is 4,000.
Oh.
And then you say add back depreciation, which is how much depreciation you had? 1,800. So this much should be your asset. This is what your asset should be, 8,600. Should have been. I'll explain, don't worry. And then you say actual as per financial statement is 6,500 and lease payments are 86 minus 65. 2,100, these are your lease payments, 2,100. Now, let me explain you. Listen.
Sir, have you done this IFRS 16?
Yes, we did it. We did it. You take something on lease and you put it as a liability, as an obligation, because you have to make payments. At the same time, you create right of use of asset, which means how much asset you own. And these are two different years. If I take in 2001, my liability was 2,800. This 2,800 actually is coming as 2,000 plus 800. These two amounts, 2,000 and 800. So this is my liability. Then when I come to the next year, my right of use asset increased. Right of use asset is increasing. Increasing means that I'm getting some more equipment, some more property on lease, right? Because I'm increasing my asset under lease. So it means that I purchased or got some more asset under lease. So how much asset did you get under the lease? This is the difference between these two numbers, which is 4,000. So this you also have to pay. This will also become your liability because when you are getting asset under the lease, that is your liability. So 2,800 was my liability from the previous year. And then I get some more equipment on lease. And of course I have to pay for that. That is also my liability. So that is 4,000. But then I say add back depreciation. What does that mean? It says that during the year to 31st March 2001, depreciation charged on lease plant was 1.8 million. Like you are showing it, depreciation on this lease plant, this 6.50 actually was not 6.50. It could have been 7.3 something, or 8.3 because you depreciated it. And after depreciation, it is 6.5. If there had been no depreciation, this would have been a bigger number. So actually what I got, the plant, I got much more value. I just did not get 4,000. Actually, the plant which I got, the asset which I got is 5,800. I got 5,800 worth of new asset. Do you understand the point?
Yes, sir.
Like 2,800 was my previous year liability. If I do not purchase anything new, the liability would not increase. But then what happened? That I purchased some new asset under lease. And this asset which I'm getting under lease, on one hand, it is my asset. On the other hand, it is my liability. When I purchase an asset of $100,000, so this $100,000 is my asset and this $100,000 is my liability at the same time. So I am increasing the leased asset. So it means that I'm increasing the lease liability as well. So how much I'm increasing?
But depreciation 1,800 is on total lease liability, not on 4,000.
No, does not make any difference. Does not make any difference. I just have to add it. Whether it is on this 4,000 or total, the thing is that if I had not depreciated, it would have been a bigger number. It would have been 8,300.
Yeah, so I'm just saying that the asset I have purchased is not exactly 5,800.
Probably more, probably less. But we can assume that for the sake of simplicity, we can assume that it was 5,800. We charge depreciation. After depreciation, it remained like this.
Yeah.
So you just assume numbers, to let your mind think clearly. So now what you had, you should have been 8,600 should have been your liability.
Yes.
But on financial statements, it only looks like 6,500. 6,500. So it means that you made lease payments of 2,100. This is what you have paid. Otherwise, your liability would have been 8,600.